Congratulations! You've reached the last video in the Minimum QuickBooks video series, and I'm going to give you some very important points that will help your situation. I know it's difficult to take 12 months worth of bank statements for every account the company has and put in every transaction together just to be able to file taxes. Sometimes you might forget some of the information in the video. Well, how can you remember everything? You don't have to remember everything at once. You could view the course a second time, but as you're entering transactions, if you get to a transaction that you don't remember how to put in, just look back at the list of the videos that were in this series. Look at the title of all the videos, and then you can view the one that will remind you of what you need. You really should do a bank reconciliation. Bank reconciliation is the process that makes sure that the statement matches exactly what's in the QuickBooks records. After each month's statement, you should stop and use the QuickBooks Bank Reconciliation feature. You can learn how to use the QuickBooks Bank Reconciliation feature from one of my other courses on this very website. But it's important that you do that as soon as you finish putting in transactions from a particular statement. The reason it's important is that it will help you find data entry mistakes, and it will also help highlight anything unusual that you might have missed when you were first putting in the original transactions. It will also give your accountant confidence that the information you're giving him in your QuickBooks file is correct. So to make sure that your accountant knows that you did everything very carefully, you should do the bank reconciliation and print each month's reconciliation report for your accountant. Did you know that some accountants will not sign their name to your tax return if each month's statement is not reconciled? Sometimes that happens, but it's worth investing the time to study a course in bank reconciliation. The only mistakes that bank reconciliation won't find: choosing the wrong expense when you record a payment or a check. Finding payments with the wrong expense account chosen can be done in two ways. You could find by vendor, or you could find by account. If you find by vendor, you can use the vendor center like we showed you in an earlier video. The better way to do it is to double-click each expense and make sure that the correct vendor is chosen for each expense and the correct expense is chosen for each vendor. Let's take a brief look at the vendor center one more time. We open the vendor center from the icon bar, and let's pick a typical vendor. For example, FedEx. Every single transaction to FedEx should be delivery expense. So if we double click and we open it up, you can just click OK. It should say delivery expense as the account. Let's double click the credit card charge. Yup, delivery expense. Same thing with UPS. Click on UPS. There's only one transaction here. Double click and it says delivery. What else? Well, Con Edison has one charge for electricity. Okay, I'm trying to think of something else. How about JNR Ad Firm? JNR Ad Firm have two checks. When you double click, you should make sure that advertising is the expense for each of these. It actually might be better to check each expense in the trial balance and check which vendor was recorded with that expense. That's the other way of doing it. Open the trial balance, for example, repair. Repair expense should only have Rex Repair as the vendor for each of the transactions. When we double-click, we can see that for each transaction that added up to the total repair, Rex Repair was the vendor each time. That should also be true for something like supplies expense. We only get our supplies from Staples. So if we double-click supplies expense, each transaction where we purchase supplies should have Staples as the name of the vendor. If Staples is not the name of the vendor, then we can double-click, go back to the original check, and change either the vendor name or the name of the account. Usually, people know which expense it is based on the vendor whom they paid. And one last note that's important. You must tell your accountant about any personal assets that you used in business. If you donated assets, your accountant will make special adjustments. Very often, assets are used both for business and for personal, and your accountant will probably ask you to estimate what % of the assets usage was for business and what % for personal. Once you've done everything that you have been instructed to do in this video, you're ready to start using QuickBooks to put everything in to catch up for the entire fiscal year so that you can file your taxes. Good luck, and I hope everything comes out well for you. Thank you for taking this course.